Oh, I told Stephanie the other day that you can't call it the China virus or the Wuhan virus. She was like, oh, what about all my jokes, man? What am I gonna do? No, don't say it. You can't say it anymore. She's like, well, where is this thing? I need to see this. I need to see what's in there. I'm like, no, you just don't say that. You know, it's not nice to say that. She's like, okay, but Kung Flu is still on the table? Hey, welcome to the Closing Beat, everybody. Happy Thursday. It is Thursday here. This is a quick stock market update show that we do to talk about the stock market. We're financial advisors here at Jazz Wealth, a little different than others where we actually like to pay attention to what's going on and make changes there and be a part of the action rather than just say, invest with us and we'll talk to you next year. Very active around here to keep everybody updated. We're not active investors, but we do like to keep you guys updated and educated, and this show is one of the ways that we do that. Hey, speaking of maybe a little knowledge, tomorrow is the anniversary of the high in the market prior to the COVID meltdown there. COVID-19, we got to say it right. COVID-19 meltdown there. So what's going to happen there, huh? We'll see what we come up with. We won't be here tomorrow, so you know our streak. We could have just marked a high, right? Considering that we won't be here. Anyways, So in the meantime, we have some great fin tips. This week we did a sneaky trick to reduce your taxes in your IRA if you're considering doing a backdoor conversion or a post-tax contribution, or if you have a mix of post-tax and pre-tax dollars in your IRA there. And tomorrow we're going to be talking about FIFO versus LIFO. When should you use that? When should you be designating your account for FIFO or LIFO? So we'll cover that there. Also tonight, our class, Wine and Wealth class for customers, we're going to talk about how you guys need to take some profits. I've been watching the emails. I look at everything here, and we got to fix some things. So tonight what I'm going to do is give you some options to show you how you could plan for taking profits and give you a couple scenarios. So we're not going to be in the speakeasy tonight. We're going to be over there in the studio using the blackboard and everything because I want to get you guys thinking about strategy rather than going, yay, to the moon, these stocks are going to go. No, what's the strategy? You got to have a strategy there. Pretend you're a fund manager there. Anyways, let's talk about the stock market. Slight down day overall. Everything was lower on the day as a whole. I'm going to go over here to the charts. We're going to dive right into this thing here. You got the Dow, about 3% year-to-date gains, but just kind of hovering near highs today. The focus was on Walmart. Walmart, we sort of say Walmart ends earnings season. So it starts with the banks, ends with Walmart, although it's not technically over. That's what we focus on there. That's going to be your biggest drag today. Very big day for Walmart. They come in earnings miss, less than expected there. They set the bar pretty high. Wall Street set the bar pretty high there, though. Sales in stores and Sam's Clubs were both better than expected, so not too bad there. Costs are increasing. That's an issue. They want to pay the $15 an hour minimum wage. That eats into costs there. They currently pay like around $14 is the average, I think. If you happen to work for them, maybe you can correct me there, but I think the average was just about $14 an hour. They're expected to spend a lot more money on automating their supply chain their warehouses, right? Fulfillment. And that's largely because online sales are up like 70%, Walmart.com and stuff. So replacing the humans and putting in the robots there. A little bit costly to do that initially. In the long run, of course, that pays off, whether you agree or not. That's what happens there. So anyways, look at it today. Moves 4% lower on the gap, sells off 6.5% on the day. That is way more than the 20-year average for this stock's response to earnings. The actual average over the last 20 years is a loss of the range 2.6%, plus or minus. So if you had to bet on earnings and you had to bet within a range, you would say plus or minus 3%. But today you'd be wrong. Right? It was a big outlier move. There's only two other times that it responded worse than this. February 2018, it looks like I've got here, loss of 7.4%, and 2007, loss of 4.6%. Other than that, this is it. You're staring at the second worst decline on earnings day for Walmart ever there. So that's what you have in the Dow. The broad markets in general today, you could add economic data, continuing claims, initial jobless claims, housing starts, all came in worse than expected. What is that? I got tile cement on my thing. all worse than expected there, and so that was sort of weighing on the weakness to start the day. If we go over to the Nasdaq, we'll take a look and see what's going on there. It's up about 6% year to date. Apple was, again, the big drag today. It did recover a little bit, but if you're looking at Apple, broke the 50-day yesterday, a little bit more downside today, and then just a hint of buying pressure right at this support. So if you technical traders have been waiting for this pullback, maybe this is something right in here. It's the same support, right? Oh, there you go. So basically right down into there. Any gap lower tomorrow, you'd expect to see the same exact thing there. If we take a look around the Nasdaq, you're going to see things like PayPal continuing to pull back. That's totally cool, right? Let PayPal pull back. Tesla. Oh, come on. Hey. My keyboard is messed up. Tesla down to the 50-day as well. It did recover off the lows, but still down about $10 on the day. Not a big deal there. Facebook also a bit of a drag if you're looking inside the Nasdaq. And Baidu from yesterday. Baidu continued to pull back. That's a welcome pullback. Got a little too far too fast. We own it, so we're cool with it pulling back as well, even though the gains have been pretty nice on that one. If we look at the S&P 500, it's up about 4.5% year to date. That could all go away rather quickly based on how quick we know the markets can move lower. But all in all, still in a consistent uptrend here. No reason to believe you've marked a top. You got stimulus in the background there, about 3 weeks away that they're looking to do something there. And so that's what you got going on in the broad markets. You also had pretty much the focus all day today was the whole GameStop issue, the House testimony from Robinhood and Citadel, and they had like a specialist or something. I forget who the other person was. But God bless that Maxine Waters, man. I mean, the one thing that frustrates me is when people try to interject into something and sound smart, but are really just reading off paper and they're trying to pretend. You've seen it. The people like on YouTube, they try to tell you, this is how you fix a car. And they're really just reading from the manual. Oh, man, that frustrates me. God bless those people from Citadel and Robinhood, the CEO. Whether you agree or disagree with what happened, how rude is that lady? I mean, she bugs me with some of these things. It's just all showboating. And you don't ask a question that really deserves a detailed answer so that you can understand really what's going on, Miss Waters. But you don't ask a question and say yes or no. Just tell me yes or no, and then interrupt the person over and over again and say, it's a yes or no question. It's not, no, we don't answer yes. I would be the one to be like, no, it doesn't deserve a yes or a no. I'm not going to answer. I'm going to tell you like what needs to be said. So that was frustrating. I couldn't watch too much of it. If you happen to catch it and it got better, you can let me know and give me some grief or something. But whew, rough one. Let's go to the sector breakdown. Take a look, see what's going on here today. Here's the breakdown. Energy taking the day off. That's okay. Energy is the strongest sector year to date. Of course, had a massive move there. A lot of people are looking for this to pull back. 4 new entry points. That was your weakest area because of oil. Oil pulled back on the day. Where did I last see it? 1%, a little bit lower than 1%. So here's the actual price of oil continuing to pull back. No problem there. I don't have a problem with oil pulling back, especially after these gains. And you know from yesterday's class kind of how we talked about energy having an outlier move there. If you look at financials today, financials were one of the weaker ones towards the bottom of the list there. But tell you what, Wells Fargo held up the game. Let's take a look at Wells Fargo. So here's the financials. Had a great run. Everybody's happy with that. But if we look inside and go to the individual stocks today, right, here's all the performance back and forth. And we still haven't fixed the fact that those are not showing percentages. But I'm going to go over here and change the contribution there. Biggest contributor, even though the numbers are off, is Wells Fargo, right? It was upgraded by JP Morgan. Remember yesterday, Wells Fargo said that they got the go-ahead from the Fed to start their overhaul plan, which eventually allowed them to lift the number of assets they can accept. So good news for them, and that one really kind of held its own today. So that one stands out to me in the financials, not much else going on there. If you look at utilities, that's your leader today. How boring, right? Utilities are not normally something that people look at, and it's been really boring over the last couple months. Here's the performance over just the last 6 months, but I'm highlighting maybe the last 2. And there's a lot of really interesting patterns in here. The problem is, it's utilities. Like, what? How do you get excited about that? If you look at something like First Energy, here, I'll zoom out a little bit. It's trying to recover from that big drop after the last big mess they went through there. And you look, it's back above the 200-day. It's a very interesting pattern if we could take the sector out of the equation. But otherwise, you kind of have to walk away from it, right? I mean, what are the chances? You got American Electric. I like the bottom on this. I like the higher low that it set down here before trying to bottom. So looking really good there. I'm not disappointed with it other than it being it's the utilities. Like, how do you get excited about that? That's a tough one. So All in all, it was kind of a back and forth day for a lot of the sectors in here with a few standouts. We've seen that over the last couple days, and so I will just move on some of your new highs and lows for the day. Yeah, check it out. My S button is doing an S and a 9 at the same time. Oh, that's interesting. Got a little ghost in there. You got Tractor Supply. We talked about this breakout the other day. That's continuing. The volume continues to be good there. That's just people chasing a good momentum stock in the short term. Speaking of potential breakouts, you got Nasdaq, the NDAQ, if you want to look at it, consolidating near these highs. We talked about it about a week and a half ago, saying you want to let it base out for a while. Let it calm down and just sit at highs. You prefer that versus a reversal that then breaks out. You've already used up your energy to get to highs, and then you break out. You don't think that those are going to be as strong. Here we've got a little consolidation to the last couple of weeks there. Now maybe ready for a breakout if you're looking at those. Johnson Controls, that's the one we talked about the other day. The breakout continuing there, the momentum, excitement, all that good stuff, just continuing forward on that one. Nope, sorry. What do we got there? There we go, Teradyne, or Teledyne, I always say Teradyne. Breakout above these highs. We've looked at it a few times. We've left the line there for you. Finally breaking out. The volume is a bit of a concern, not as exciting. So you would call it like a tier 2 kind of a breakout. It's not one to get super excited about, but nevertheless, it's there. And Expedia continuing higher, at least after or before the close there, up to $156, adding about 2% on the day. An interesting new high, I happen to think. I'm going to try now. We'll go over to some of the stocks in the news. We'll let the stream catch up a little bit. And if you have questions, we can try to answer those as well. Everything looks good. Okay, Twilio up 7% on the day. Beat on earnings by 11 cents. They were expected to lose money, I believe. I think they were supposed to report a loss. They actually reported a profit. So I can't find it fast enough. Guidance, interesting there. I would say mixed at best if you're looking at that one. But that one was in the news. Oh, this is going to drive me nuts. Need a new we need to call Logitech. We need a new keyboard. Sleep Number, public company, believe it or not, and has actually performed really, really well. They report earnings beat by 71 cents. People are going out and spending money on very expensive mattresses, in my opinion, and so they reported that they're doing well. Cheesecake Factory doing okay, thank goodness. I've got a gift card there burning a hole in my pocket, dying to go there. Missed earnings by 27 cents. Revenue's a little less than expected, or a little bit less than what they previously guided for, but better than expected. That's the key there. So that stock continuing there, even though it wasn't a blowout kind of a quarter. Newmont getting a little boost here today. Newmont Mining, I know a lot of you guys like this one here. Beats on earnings by 7%. Revenues weaker than expected. Declining price in gold. It's a little bit tough right now. If you look at the price of gold, now I'll say gold broke its little downtrend here, or broke its down streak of down days. 1, 2, 3, 4, 5 days down. So that's cool. Problem is it was only $2. So it only was positive by $2 on the day. And so you can compare the two. You can see Newmont weak, gold is weak. The two go hand in hand, of course, there. And then a stock we just talked about yesterday, Sam Adams, right? Sam Adams comes out with earnings. They missed by 28 cents. Revenues better than expected. Still pulls back here. Guidance was the mix there. It wasn't exciting. They didn't have really a whole lot of excitement to say. Still got a number of upgrades. The problem is the analysts that are upgrading this stock are playing catch up. They're not saying higher price targets. They're saying, okay, we think it's worth 1,002 apparently at Deutsche Bank. Yeah, Goldman Sachs is the highest there. They are $13.75. They went from $1,200 to $13.75. They would be the highest price target over the next 12 months there. I want to point out Waste Management. So we talked about this yesterday, that they have earnings coming out. They reported earnings, of course, everything was basically fine, but not one of the more volatile earnings days. So this is not for active traders. You'd say, I'm not interested in this because it's not going to be very volatile. There's not a lot to chew on there because second and third quarter are the most volatile for them. We covered that yesterday, if you're curious why. Apparently, Robinhood missed their deadline for the giving out the 1099s. I believe they filed the extension for it, so it's a lot of Twitter talk at the moment. Dividends being raised on Humana and Foot Locker, both of them in the news today. Tesla, if you're looking to buy a Model Y or Model 3, it looks like they lowered the base price there, and Zillow is looking to sell $1 billion worth of shares. Yikes. We got to go public, man. The getting's good out there. If you're a public company, what are you going to do with that $1 billion? They're houses. All right, so other dividends coming out. UPS, $1.02. Welltower, 61 cents. Tractor Supply, 52 cents. I believe that's up as well. Equifax, 39 cents. And WD Brands, 50 cents is the case there. I'll try to answer some of your questions if I can. A little weird looking over here today, but we'll see what we can do. Those darn gas prices. Yeah. And they're going to go higher, right? You can't have, it doesn't matter where you stand on this. I don't care. I'm talking about the price of oil. You can't have what's going on with the new administration and expect gas prices not to go up. They're going to go up, right? So is oil. It's just going hand in hand. So whatever the solution is there, I don't know. But in the meantime, we kind of want to like hedge higher gas prices by buying a little oil as this thing pulls back. Does that make you think? Oh, you want to buy the Walmart dip? Well, all right, day one, remember. So got the biggest, second biggest move ever on earnings day. That already loses a point, right? I don't know if I want to dive into that. I would like, personally, to see it stay right here at the 200-day and just do nothing for a little bit. I know I say that a lot, but I'd like to see nothing happen. Give it some time to digest, watch the volume bleed all the way back down towards average. Then you take your shot there. It would be great. Other than that, maybe something a little more parabolic to the downside if it's going to continue lower. 132, 131, somewhere in there would be the ideal there. Is it time to start tracking the odds of a Fed rate hike? I think they're next to nothing, if not exactly nothing, for the rest of the year. I haven't looked in a while, but yeah. I love it. When do we get a real pullback? I mean, if you're going to put $2 trillion into the economy, do you get a real pullback? I think there'd have to be some kind of, outlier event. I just don't know. Yeah, it's a tough one there. Find a SPAC to acquire. Yeah, anybody? Who's out there? Anybody anybody know somebody? I don't have very many friends in this industry, so I don't have like people to call. But I'm open to ideas. Look at these people going public. Crazy. Plantair. Yeah, a lot of things going on with this one here. Look down by these lows here. I don't analyze these from a technical standpoint until there's been more than 200 days. But if you are one who will, you kind of like the pullback there. You got the extra volume today out of the way. Hopefully, maybe there's a couple day bleed over here with the lockup, but expiration. But don't you kind of like this area, right? It's down here on 23. You don't feel like you're paying too much. You're not getting the best deal ever. But is it really going back to $10? I mean, this is not, this is not, what do you say? This is not AMC or something like that, right? There's some substance here. I love it. Etsy holding up nice today. Yeah. Oh, now what is the deal? Oh, maybe the battery's going dead. Look at that. Etsy. Is that weird? It was all right. Yeah. I mean, preferably this does pull back, right? Give yourself a decent pullback. A pullback to the 50-day would not break the uptrend in this stock, so you would welcome that. We're sort of refusing to do it at the moment, though, right? Yeah. Yeah, I just saw Janet Yellen talking about interest rates and inflation and stuff, and still she thinks stimulus should be put out there. It's a risk we have to take, I think, is what she said. And I don't know. I mean, it's fine if you take a risk, right? If it's just like investing. If you're going to take a risk and you go, it's a risk I have to take. Okay, I hope it's successful, but what if it's not? What are you going to do if it's not? That's what I want to hear. And I think at some point that the volume of those cries become louder and louder of people going, okay, but what if this doesn't work and inflation gets out of control and you can't control rates anymore? Then what? Can we hear a little bit about that? We're not hearing a lot about that. No. Not hearing a lot about that. I love it. You want to invest in that stock just because she's got the hero cape on right now, right? I mean, good series of bets that led to outperformance, and you got to expect that continues. What I love about them, by the way, her in particular, they call themselves, what was the term she used? Liquidity providers. I love that. So the idea there, just like we do here, when the markets are doing well, they don't sit back and watch it. They provide liquidity. That's a fancy way of saying we sell when the markets are going up. We offer liquidity to people who want to buy the stock from us that we bought cheaper. That's what she was saying. And then they do the same on the way down. When the markets fall, we offer to buy the shares that nobody else is seemingly wanting to buy. I love that. I love the way she said that. Yeah. How much tile do I have left? I think we figured that we had knocked out about 1/5. So 4/5. A lot, basically. We got a ways to go there. Yeah. All right, I'll wrap it up there because we got to get ready for our class tonight. The Wine and Wealth class. If you're one of our customers, you just go right into the dojo. It'll pop up live. That we're getting started there. We're going to talk about some profit taking there. I'm going to give you some of the active traders' reason to focus on different potential strategies, right? And ways that you may be able to incorporate that into your plan so you are always playing offense and never playing defense with the stock, a stock market, or your portfolio if you're more of an active trader there. So we'll see you guys in a little bit. Starts at 8 o'clock Eastern time. And for the rest of you, have a great rest of your day. Thanks for stopping by, and adios.